All right, hello and welcome back to another episode of the Whiskey Wind Down. My name is Dom McShan, and today I have with you one of my most recent seller clients, Mr. Michael Carpenter, also the real estate marketing guru. Welcome, Michael.
Hey, welcome. I'm glad to be on, man.
Awesome. Well, thank you for joining on.
I don't have any whiskey with me, but I got my St. Arnold strawberry cider, so.
Hey, that's all good. This can be the wind down. You don't have to actually consume whiskey. You can just wind yourself down in the sense of a relaxed conversation too. So whatever works. We don't want to force consumption.
Love it.
I got a little Jack Daniels mixed with some Coke Zero sugar. We're gonna let that ride.
That's classic.
Very classic. Well, with that in mind, I wanted to bring you on as a seller that has now recently closed, and you are also one of the many sellers that I've worked with that have also sold their home completely remote. And I do recall us having a conversation about that initially of like, what is this process like? So I think that's something that's very beneficial as far as people being able to hear and kind of want to hear your side of the story as far as your experience.
Yeah.
No pressure.
I was shocked at how smooth. I mean, all the signing, everything. I mean, everything's digital already, right? So, the only challenge with us is obviously we just had so many hurdles to get over with the title company, right? So that was the only thing that made it rocky. Other than that, it would have been super smooth. The mobile notary, like I didn't even know that was a thing that could do a notary online. Literally blew my mind. Like I'm never probably ever gonna try to do a notary in person again. I'm like, let me just
it's a game changer.
Call and get it done in 10 minutes. I gotta like call somebody and try to schedule an appointment and meet them somewhere. Like no, bro. So yeah, it's a game changer, and I think it's the reason we picked you was because you were on the ground. You know what I mean? So somebody who I think you live probably less than 5 miles from my house, probably. So like
right.
Ability to have the trust to know like, okay, like we're doing this, kind of virtual real estate sale, but you're there. So I think that was a game changer.
Awesome. Well, thank you for trusting me with your business and so forth. I'm also always curious as far as like, how did you identify or like find me, or what made me come to mind as far as like your real estate agent, especially you since you have connections with so many agents, just being in your marketing with real estate profession.
Yeah, I'm not gonna lie, it was tough, bro, because I do know a lot of agents, and I was like, yo, somebody's gonna be mad that I didn't pick them. But I think it came down to ultimately, it came down to your proximity to the property, right? Your knowledge of the market, and then also like just the relationship. Like we had been in contact for the last 2 years, right? And I remember you helped me when I was kind of first getting started with real estate marketing stuff. I mean, you were there for me. You helped me out. You gave me some feedback. So there's always just been an exchange of value that's been over the years. And so I appreciated that it was just like, hey, you're somebody who does really good at what you do, and you were right there at the right time. And you were top of mind. So like I didn't have to be like, okay, wait, what was his name? What was his Instagram name? Like, you know what I mean? I was like, oh, Dom, right? It was just like, got your phone number, and I remembered, I remember we talked about this before. I think we talked about the first time we did one of these, but like, that real estate investing guy that you gave me like 2 years ago when you took me out to get pizza, bro. And like that, like, I was so impressed with that. It was so well done that it just instantly like, and I was like, okay, like Dom knows what he's doing. So like, yeah, that was kind of why I chose to go with you.
That's awesome. That's why I love the print marketing collateral, because I feel like it definitely leaves a lasting impression.
Yeah.
And even then, I didn't even remember like delivering that or giving that to you. Like I remember us eating pizza, but I was like, I gave you a guy, because I don't know how. I think it just kind of came out organically. But again, just leaning on relationship, which I think are definitely helpful pieces when you're gonna be working with somebody.
Yeah, and I think too, other thing I would add too is like you're genuinely a friend too. So, when you think about the balance of like hiring your friends is sometimes sketchy, right? Because like, oh, if the deal goes wrong, you don't want the relationship to go wrong too, right?
Right.
It also helped me feel a little bit more trustful though, because like I went to a Christmas party at your house 2 years ago. You invited me to your birthday party in Puerto Rico. So I was genuinely like, okay, this is somebody who genuinely cares about me. So you're gonna go to bat for me beyond just like, just being a client. And there was a couple of times where I
just being transactional.
Yeah, I didn't think the deal was gonna go through, and I was like, dang, like Dom's, like you obviously you get paid, right? So I was like, dang, I don't want my my boy that spent this time and then he didn't get paid, right? So, but at the same time, like I knew it was more than that from you. It wasn't just like, hey, you're trying to get a paycheck, right? It was like, hey, you're really trying to help your friend out. So that was another perspective.
Awesome, awesome. Well, I definitely appreciate it. Yeah, we had a rocky road. So if you're tuning in, we're gonna talk about just some of the hurdles that can come along with just being a seller in general. So I would love for this to be kind of like, a Q&A, but to also just kind of share some advice and guidance to folks that may be first-time sellers or that are going to be thinking about selling, as far as things to consider, especially if they are going to be selling remotely. So just being in a military area and work with a lot of relocation folks and so forth, that's kind of how I've adapted some pretty efficient online, utilizing the remote online notaries for things, e-signs for everything, even working with particular title companies that can accommodate for the remote online notary too. So those are game changers. But otherwise, was there anything else that was helpful as far as like the initial prep phases, as far as getting ready to sell or list your home without being here?
I think ours was such a unique situation because, it was an investment property. And, so I think there were some situations that I think on the prep side, we just didn't really have to worry about that. I think other people would if they had more traditional real estate property. I think that the prep, we did the best that we could. And I was hamstringed to a degree, right? There was just things that were happening with the property that just didn't make me feel great. You know what I mean? As far as, okay, like we barely got through this thing, right? And I don't know if we can talk more about that later if you want to, but yeah, I felt like the prep was we did the best we could, and
Right. So as far as like overall, like I tell most of my seller clients and so forth, when it comes to, getting your home on the market, your job as a seller is more so on the prep side than it is on like the under contract side. Versus like on the buyer side, it's typically like, you're focused on the pre-qual in the beginning, and then you're in the search process, and then you're in the negotiation process, and then the repair negotiations, and also going through underwriting. For the sellers, it can be a lot easier, especially if you do everything on the front end, to just knock out all your paperwork, knock out all your sales disclosures, which we can also do online. So being able to utilize a platform like that. And when working with remote sellers, it's always helpful, like for you, creating a Google Drive folder where I'll go pretty much scout out the property so you have an idea of the overall condition, because that's always something that's really important. It's typically a barrier, or I won't say a barrier, but it is something to unpack with sellers, especially when we look at comps, because we can look at home, but you really got to look at like, okay, so these are all comparable homes, but there can be different conditions. And there can also be different like aspects, amenities. And if you really get into a really niche area, it can even be like, even though you have a home that's in close proximity, it can be an exact location. So it's like, but that street faces like the main street that is XYZ, even though it's only 0.2 miles away, your street is 3-4 blocks away. So that can make a difference, both on the positive or negative side.
Yeah, and I think one thing that I would tell sellers, if you are an investor, and even just for, I guess, maybe a more, if you just got a home, a primary home, I wish I would have paid more attention to the comps in the market before I was ready to sell. So obviously I wasn't in the mindset that I was going to sell, and the opportunity presented itself and it just made sense. But I wish I would have understood the inventory around me better. I wish I would have understood the appraisal process better. Like, I wish I would have kind of thought about some of those things. Like, hey, in the scenario that I do need to sell, am I in a great position? Are there things that I should upgrade or, to make me more competitive in the market? So that's definitely something, like, I don't know if a lot of investors do this, but like, I think I might in the future, like, get an appraisal every year on my property. Just so I kind of just know, like, just so I can be like, okay, what else is out there that I need to be paying attention to, or doing a CMA, like doing those things more consistently. So you have that to really think about. That's something that I learned personally that I think would have made me be a better seller.
Gotcha. That definitely makes sense. And then I definitely recommend the CMAs every year. And that's something that like typically your local real estate agent will do. So I typically do it around tax season. So it's a dual whammy in the sense of one, give you a good kind of assessment of your property, but to also like compare it with your assessed tax value. So for any reason, like the taxes are a bit higher, XYZ, that can give you some leverage. And I've had a few folks this year. It was about 50-50 this year, where folks were getting assessed a bit higher than what their market value was. And I had quite a few clients that said, like, hey, I got them to come down. Like, even though by the time they run the calculations, it's like, oh, I saved like $10 a month. But, it can still be some savings and so forth. Or in some cases, I'm telling folks like, yeah, no, homes are selling much higher than your tax appraised value, so you probably don't want to don't take this to them because you're not gonna get a reduction or anything. But being knowledgeable of that is definitely helpful, and that's something that many real estate agents would do, just to again build a relationship, add value, and always stay top of mind. So that's one of the reasons that I like to do it. Is one of those things of like, if you never know who's going to be thinking about selling, and it's one of those things to where like, if you can always be that first name that comes to mind for adding value, that's always helpful.
Yeah. So quick question for you. Do you think, one thing I'm a little insecure about, I never want to waste an agent's time, right? But do you think people should reach out to real estate agents consistently to get like that in knowledge, you know what I mean? As far as to understand their property value and you know what I mean? Because you don't want to you don't want to lead, you don't want to lead them on, you know what I mean? But also information. So would you recommend somebody still reaching out to you if they want that kind of information, or should they wait until they're seriously considering it?
I would say no, you should definitely reach out, especially if it's an agent that you've already worked with in the past, which is one of the major things as far as in my opinion, and even I struggle with this, I'm really trying to do better, is keep in contact with past clients. Because in the world of agency, you get busy, you get overwhelmed with accolades of your current clients, and we're gonna talk about working through the deals, like your deal. So you actually want to be following up with past clients, but you also have to actively be pursuing new clients and putting out your marketing, and you also have to be actively figuring out deals and delivering service on these clients. So in my mind, the past clients are kind of the easiest on the priority list to all right, I only have so many hours in a day. We're supposed to do a pop by or something that didn't happen. But that's one way just to stay in relationship, check in, how you doing, how you liking the house, what improvements are you looking for? Are you considering doing, and so forth? And I will have clients that reach out, and I love and appreciate that in the sense of hey, I'm thinking about doing this. Do you think this would be a good value add or big one? We're thinking about getting solar panels. And I'm like, no, do not put the solar panels on. So things like that, I think, are definitely helpful. Keep up that contact and also, share some value. You did mention one piece of what she said. You were saying you were wishing you were monitoring the inventory around your home more. And I would love for the people to know, and I'm also curious just to jog my memory. What was the impetus as far as you saying, hey, I think I'm ready to sell? Because I remember you reached out saying hey, these homes sold. What's up? But run that back for everybody.
Yeah, it's twofold. So one, I was at a real estate conference and I was talking to some guys and I was telling them about my property. I was like, yeah, I'm cash flowing $200 and it's really not moving the needle at all. And I was just talking to them about it and they were like, yo, we think you should sell. They were like, hey, because I was like, there's kind of this mantra don't sell your properties, right? Hold on to your properties, get the equity. And I was talking with them about it and they were kind of you're like, hey, you might have opportunity that you're losing, right? By holding on this property, there's other things that you could do that could help you make more money in the long run while you're just holding on to these few coins, right? So I was thinking about that. And then I saw an agent on Instagram showing a house that was right down the street from my property. And I was like, wait a minute, is there something happening? Why, is there houses selling? So that's what triggered me to pay attention to it. So then I started I looked, I had a quick conversation with her. I was like, hey, what property is this? Where is it? What's the information? What's going on? And then now that I saw that there was movement in the market, I was like, okay, let me reach out to Dom and see what's going on, right? So those are kind of the two things that I started thinking about other options. I also knew that my property was getting to the point where if I wanted to raise rent, I was gonna have to make upgrades, right? I was gonna have to new windows. I was gonna have to get a new, some new HVAC systems, potentially new roof. So there was things that I was like, ugh, I don't really know if I want to make that investment, right? You know what I mean?
Right.
So it was a combination of three things, and it just felt like it was time, right? And there was movement happening in my little pocket of the neighborhood.
Gotcha. That definitely makes sense, and those are all things to consider, for all sellers, but especially sellers that are have properties that are primarily investment properties. It's managing or one considering your cost of your capital. That that's kind of one way to think about it. So yep, you have this equity locked in here, which can really get in. I won't go into math, but you can get on cash return and other ways to calculate things. But ultimately, if you have this pool of money, and this is what it's generating on a monthly basis, sometimes it can be more beneficial to pull that out, disposition, and then maybe reinvest it into another home, maybe even a newer home, for instance. That's kind of some things that many people will consider of okay, I'm considering my home age. the age of my systems and so forth. So now I got to really expect my maintenance expenses to potentially increase. And my rent's not necessarily increasing, or for me to increase my rent significantly more, I got to make these other improvements.
Yeah.
And that's when sometimes, you know, you make that decision of like, I think this might be an ideal time to sell, because it is. Yeah. I think it's twofold. It's either you gonna hold it for like the long run till you like pay it off. Now that's when like, you know, everything is great. You have a paid off property that you can still rent out. Otherwise, it's kind of like almost like a stock in a sense of like getting your max value, or like, hey. And a lot of times, 7 to 10 years is like a good kind of span of a investment property where it's like, all right, things have shifted. I've kind of gotten everything I need to get from this particular home, and depending on where things are, let's shift some things around.
Yeah, and I also knew the market. I knew what I had was an anomaly in the sense of I bought the property in 2019. So what happened between there and now was like obviously the real estate market like flipped on its head, right? But 2021 was like this boom, right? So I knew, I was like, all this equity I'm sitting on is based off this happen in the world. And it's isn't normal that I'm going to have this much equity in literally a year and a half, and, you know, was potentially sitting on 80 to 100K of equity, right? I'm like, okay, that's like, this is kind of a lightning gold strike type moment, right? For that to happen in a year and a half. And the forecast was I wasn't going to have that going forward. So I was like, okay, I just had this big boom. I'm about to like level out. So I'm leveling out. I don't know if that's really the ride I want to be on for the next 5-10 years.
Right. Because that is something that many people like. That's a unique investment strategy where some folks will even like take a property, even if it's not necessarily cash flowing a lot monthly, specifically for the appreciation gain. So it could be like, oh, I'm cash flowing like $200 a month, but like my equity is going up significantly. So that's a whole strategy. Typically, you find that in new construction communities, to where like if you can break even and more. Folks will say, hey, I'll take that, but pretty much I have tenants paying off my property, and I'm building equity, and now in the future I can like play with that equity and so forth. You also get some tax appreciation benefits and things like that.
Yeah, which I mean, I'm excited for the people who bought my property, because there's definitely some low-hanging fruit. Like both of those garages, if they want to go invest some more money and turn those garages into like add an extra bedroom, there's your equity. There's your there was the equity that I couldn't buy, right? I was like, I'm not prepared to buy the equity that's going to upfront cost wasn't going to be worth it for me. But they're just buying into the property. They haven't accrued some of the challenge that I had. So yeah,
right. And they ultimately ended up getting one unit, got a new AC. So that's another thing that we talk about, man. Because this summer has been the AC unit. So I've had like 2 mishaps. I won't even say mishaps, but just unfortunate circumstances. I had a buyer client that literally closed on the home, and 3 days after closing, the AC unit went out. And that was like bummer. And we got it inspected, like everything was fine. We did a final walkthrough, XYZ, and like, you know, for people that are wondering, like, what can you do? For the most part, nothing. Like after closing, especially if it's a regular like wear and tear type of thing, that's not necessarily something that you can prove. Oh, this was not disclosed by the seller, XYZ. It was like the unit was older, so that's why I was like, you want to make sure you get a home warranty. They weren't necessarily interested. And it was like 3 days later, it was like, dang. And then in your case, which is pretty significant for a seller, of like, what happens when you're under contract and you have repairs that happen? So what was that like?
And I'm sick because I canceled my home. So the seller paid my home warranty for the first year. And the second year I had it for maybe 6 months. And I was trying to get more cash flow out of the property. And looking back on it, I was like, a savings of $70 a month for me, and now was not worth it at all. Like I was like, I just wish I would have kept paying $70 a month, and that like AC unit going out wouldn't have meant anything. So that's why I'm a big proponent of insurance. Like I buy insurance on everything. Like I'm not cheapo when it comes to my insurance. I will pay for insurance. And this is the one time that like I just did something. Like at the time, I didn't feel like it was stupid. I was like, oh, I'm just trying to get a couple $100, $100 more. Now looking back on it, I was like, well, that $100 just went down the drain anyway. Because I would say, especially if you have an investment property, keep that warranty, because that's going to save you. I mean, especially if you have an older home. If you have a newer home, you might be good, but if you have an older home, just pay the insurance, pay the warranty, because the alternative is just not good for your pocket.
All right, gives you some peace of mind. And I'm definitely one of those folks who are like, I'm about 50-50. Like, I like the security of it, but depending on like long term, like, but you never know when you're gonna use it. But essentially, it's kind of like sometimes you can pay all this. You can pay the $7 a month, and then of course, like then when nothing happens, you're like, dang, I was just giving $7 a month. I could have just been saving that in like my little rainy day maintenance fund. Because the thing that you do have to watch out for is just finding a really good home warranty. Because most home warranties will have limitations on their coverages. So you really got to read the fine print. And that's where, like, I've just had some clients that were, like, disappointed maybe. Because they'll think, like, oh, the AC went out. They're going to pay for a whole new AC. And they'll be like, oh, we'll pay up to $2,000 for an AC. And if the AC unit is, like, $6,000 to $7,000. So they're like, so I'm still paying $5,000. And I was paying y'all $7 a month. And y'all charged me $150 to come out and take a look at it.
Yeah.
So I was like, I can see how that can also be like one of those, but it's the peace of mind. AC is about the only thing though to where like they gotta, because again, ACs are expensive. Yeah. So that's why I think that's the one thing where like there's a cap, but everything else typically like water heaters, like water heaters can be in the thousands too, and typically those are things that will be covered completely along with other things.
Yeah. Yep.
There is an option now, and after us doing this, I'm gonna consider it more. I've never really recommended it. But there is an opportunity to like get a home warranty when you list your property. Like it's specifically coverage for sellers.
Ooh, nice.
And it's not as expensive because you're not paying for it on a monthly basis because it's pretty much only for the period in which you're under contract.
You like pay for it up front.
I have to go back and look at it because I've never recommended it per se. I've been knowledgeable of it. But like now after like, your scenario, I'm like, that might not be a bad thing if it's like, providing coverage in that regard.
Yeah, I mean, it was the difference of 3 days. You know what I mean? Like, well, actually, it was a difference of like 7 total. But like, yeah, I mean, if we would have closed on time, yeah, it just like I would have skipped right through. So that was crazy. Yeah.
And then the new buyer would have had their home warranty, so they actually would have had coverage, but we hadn't closed yet, so their home warranty hadn't kicked in. So for those that are just following along, we can go through the overall journey and things that can happen because I find it's not even funny. I like laugh. It's just, for YouTube purposes, but really, just working through things that happen with title and talking about title insurance and so forth. That's something that's definitely worthy of discussing because you're actually the first person out of about 100 plus transactions to where I've ever had to like actually rely on a title insurance commitment to like step in. So we can talk about that as a process. And ultimately, whenever you purchase your home, you have title insurance. One of the things they're going to do is look up all the things that may affect the title on the home. That can be liens with the city. That can be contractor liens. That can be, affidavits of heirship or anything dealing with the death of heirs. Because many people, especially when you get into marriage, divorces, death, and kids, if things aren't documented correctly, legally, there can be other folks that have ties to the property. And in like your case, I'll let you share whatever you wanted to share. What was kind of a scenario that happened after we were on the contract with your home?
Yeah, so turns out that 2 previous owners, so not the guy I bought it from, but the person they bought it from, was apparently still on the deed. And so ultimately that created an heirship problem because, he's deceased. And so they had to go find his wife and his kids, I think, and have them sign some documents. We also had a title, or not a title. We had a lien from the city, which was like $200, but it was like a grass violation or something that was on the property. So like big, like mess ups on the title company, right? Because those should have been really easy catches. Like those weren't like, what I mean? We're not talking about like something they missed from, years ago, right? We're talking about like very recent transaction they missed. And yeah, I mean, it sucked. I mean, it held up our closing. It really kind of threw the deal into some turmoil. Even with the title, I mean, I just learned you got to vet your title companies, you know what I mean? So obviously the title company actually had a really bad reputation. At the time, I had no idea. I didn't know I needed to even look at that. I didn't even know what the title company did. And so I now know, hey, I need to, actually do some research. And the seller who I bought it from, they picked the title company. So at the time, knowing what I know now, I would have had my agent when I bought the property, like just make that a provision and say, hey, we're requesting a different title company. The other thing too, I learned too, is even once I submitted my claim, my title policy claim, the title insurance company, like we had to hound them to actually do their job too. I was just really irritated at that. I was like, why? Like I sent the email with all the information and then I didn't hear anything from them for 5 days. And I was like, okay, it's been 5 days. Like I haven't heard anything. So that's when I called them. And then after that, 2 or 3 days later, everything's good. And I was like, well, like, like
right.
It was just sitting in your email, not doing it. So it was just like, I just learned that industry, having an agent who, knows, has good people on their team is super important, right? Because,
Absolutely.
I learned that from buying the house. Like, hey, I wasn't paying attention, and my agent who helped me buy it wasn't paying attention either, and didn't alert me to like, hey, these are things that you need to be paying attention to. So I think those are just things that I think I learned, and obviously really sucks to have to learn that the hard way.
Absolutely. And then there are 2 things that I would even share, just like, some educational pieces for things for people to consider. One, like your title insurance and your title company. It's negotiable, one in Texas, so it can be for the buyer or the seller. There's one school of thought that whoever's paying for the title policy gets to select the company. But again, at the end of the day, everything is negotiable. So I would say it will be a fool of a seller if like a title company is the thing that kills the deal. Because ultimately the fees are regulated. So they're very similar or comparable because for title insurance, state regulated costs. But the differences that you experience are going to be like the level of service and experience. And that's where like your agent typically comes in at. And then also like pretty much how reputable they are when it comes to like title insurance claims, like paying and like or handling whatever they need to do in the rare instance that they do have to cover whatever things that do come up. So those are 2 things to really like consider. Not just thinking like, oh, it's just they're all the same, because they're not all one and the same. And we'll typically know as agents, because a good title company can like make your transaction so smooth, and it makes the agent's lives better. It makes sellers happier. It makes buyers happier. But when it's not, it's like doing double work, because you're like, okay, I'm trying to work through all of this on the transaction and hold this together. Now I got to follow what y'all have. Y'all done what y'all supposed to do? Have we done this? So it's definitely helpful when you have a title company that's rocking and rolling.
Yeah. And I would say too, like, I mean, I wish I would have read all the documents at the closing table. Like it's pressury to like, it's pressury when you're like at the table and everybody's watching you sign. You know what I mean? So I feel like when I first signed, I really wasn't reading everything. I was just signing what they told me to sign. So there was things that I just like, when it came to the title policy, there was things on the policy I thought were on there that weren't. So like, I just didn't even know that till I was like, filing the policy and I was reading through. I was like, oh shoot, all this was here this whole time. Like I could have just read this at any time. So I definitely encourage people like, actually read that stuff, because you need to.
Was that your title commitment?
Yeah, no, yeah, my title commitment, and then the policy document, just like telling me like, hey, here's what they're gonna pay for, here's what they're not, right? And I just had assumptions based on what I knew. I was like, oh yeah, they'll cover this, they'll cover that. And then I look on it like, oh, actually they don't cover that. Like, so yeah.
So that is very important. And most of the time, the title commitment is something that many people can gloss over. So ultimately your title commitment is the precursor to your title policy for those that are following. So after they've done their really in-depth search and so forth, they're going to provide the title commitment, give you some information about the property. Hey, this is the chain of title essentially. And then there will be a section, Schedule C, I believe. C is for clear to close, meaning things that need to be cleared. But there are ways and opportunities to where, and this is where you could get into some shady aspects or shady agents, to where like certain title companies can still proceed with the sale with exclusions on the title policy as a way to like advance the sale without actually curing what the issue is. And it's not going to be an issue until you then go to sell the property, and now it's on you. And if you have, say, a title company that is doing their due diligence and like, oh no, this is like a whole situation that we really need to get done, and they bring it to everybody's attention, then it's kind of like this thing that you have to work through. So those are both things to consider as far as like having your title insurance, and I highly recommend title insurance as well, especially in Texas, because otherwise we don't necessarily have attorneys involved in the process. Like some states are attorney states, to where like literally attorneys are the ones that are drafting up everything and doing like abstracts of title and so forth. But for us, The title company is the title company is only like in between as far as adding that coverage.
Yeah.
But ultimately we made it through. There was also some hurdles and so forth with the appraisal, which we somewhat kind of knew. It's kind of like, hey, we're gonna push it. But like, in my mind, as an agent, that's kind of the goal, at least if you're working with the seller. Like the goal is to shoot your shot and you can get like, but I got a buyer and we were up here and it's like, dang. We gotta come down on the appraisal.
This is something I also learned too. Is I guess I now understand why it's important, the type of financing that the person has. My first time buying, I was like, it doesn't really matter. It's gonna get paid regardless. So it doesn't matter whether it's conventional or FHA or whatever. I've just learned. You have somebody who's doing FHA or somebody who has, some of them more, more cut. I don't say cut though. I mean, there's just certain financing where they just check more boxes, right? So I'm like, okay, not that I don't think a conventional, if we would get with the conventional loan that it would have appraised, but I just understand the value now in that, right? If it's a cash buyer, I'm not worried about any of that, right? I'm like, yo, what's the price? So I just think that
that is definitely the value of cash buyers. And there is a somewhat misconception, and even like amongst agents as far as like appraisals and like types of loans. Because long story short, to make it simple, appraisals have different opinions of value. So you can literally have 3 different appraisals on a property, and you will have 3 different values. None of the values will be exactly the same. However, as far as like, there's a misconception of like something, the FHA appraisals come in lower because of XYZ, or the VA appraisals come in lower. When that's actually not the case, because the appraisers are certified as appraisers. So like whatever loan type it is doesn't necessarily influence their valuation. Now, what it does change is some of like the extra property conditions. And that's where you do have different things to where like chip paint and like wood rot around the exterior, like those are things that typically FHA and VA will not allow, and they can require, the appraiser can require, or they have to check, hey, there's this issue, and then now it's required for those things to be repaired. Versus conventional, that won't be a thing at all. And it's like, okay, unless it's like something pretty significant on the structural soundness and safety of the home. But that is something that, as a seller, you want to be mindful of it and consider as far as like overall what's the financing like, or even just approval wise. We talk about that as far as vetting some of the lenders. So in our case, we're working with the credit union, but they were really good. We didn't have any issues. That's why I was like, I never heard of them, but
I was actually impressed with some of the offers we got after we got the appraisal. So like for context, we listed the house, we got an offer at $255, and then the appraisal came in, I think, at like $232. And we had gotten, I think we got like a cash offer that was like $225, $228 or something. So like looking back, I'm like, those, like, they weren't too far off. I mean, like at the time I was like, wow, it's so, that's such a low ball. And now I'm like, okay, I mean, they were in the ballpark. So I think it kind of made a little more sense for that offer. But I mean, that was still a shock, but it was also one of those things too. I had gotten, I think I had a sense that we were going to be lower, you know what I mean? So I was surprised we got 255. Like I was betting with house money. Like I was like, we about to run away.
No, I can't share that. After that, now, like that was some legit agent negotiations, by the way, because the goal is to get multiple offers. When you have multiple offers, I had the ammo as a listing agent to pipe this up because nobody knew that the other offer was 220 something. So it was like, we're in multiple offers, bring your highest and best. That's why it's like so big to get multiple offers, even if it's a very low offer, because that just gives you the ammo to like really pull out the best in folks while also remaining, keeping your integrity and so forth. Like not saying the last thing you want to do is act like you got multiple offers and then say like somebody pulls their offer and then the home is still sitting on the market. So then they're like, oh, I thought y'all had multiple offers. I was like, oh yeah. See what happened was. But that's definitely something that's key for sellers. When you can drive multiple offers, you get a lot more, and that's when you can push the price up. And then ultimately, in some ways, that's kind of the appraiser's role as a security for the buyer, a security for the lending institution. Because when we talk about appraised value, market value, a lot of it comes down to willing and able. So ultimately, in our case, we had a buyer that was willing to pay up to $255 for the property. However, they were not able to pay $255 for the property because they did not have cash, or they didn't have the cash to pay the difference. So that's when like you have those things in the marketplace that come in. Otherwise, if people want to buy what they want to buy, like who's to say this isn't worth it? It's like that's in the eye of the beholder, and that's where cash buyers in the past 2 years were like, I'll buy it. Like I got cash. So
I learned. I mean, I have some builder friends, and I learned the trick that builders do that I was like, yo, that's crazy. I had a builder friend that told me he had a property that didn't appraise. He paid the difference because he wanted the comp, because he was going to build 3 more properties. And so he was like, yo, I'll pay the difference because I know I'm going to build 2 more properties and I want those to sell at the higher price point. And I was just like, this real estate game it's crazy. Like, you know what I mean? Like,
it's a numbers game.
Yeah, it's a lot of people it's really about the numbers. And I hate the appraiser was the problem when we bought it too. Because the appraiser, when we bought it, it was at the height of 2021 where it was just the market was crazy. Everybody was buying, interest rates were like 2%. And we couldn't even get an appraiser to do the appraisal. Like they literally didn't want to do it. Like they were literally turning down our appraisal. Like
they were slammed. They were like, I don't know. I
get to it. We had 2 guys accept it and then back out. I didn't know they could even do that. They were just like, I mean, they just didn't want to do. They couldn't. We didn't have comps when we first bought it. Like when I bought it, I was the only that sold in that area, so there was no comps. They didn't want to do the extra work. So it was like sucky then, and then it sucks that on the back end too. I was like, yo, this appraiser just cost me like $30,000. I was like, I freaking I know he's doing his job, but I'm like, bro, like so it sucks. But I mean,
and we even did go through the process as far as like presenting some of this, because again, it's kind of like you want to go into the end of the fight. So you got title issues, like, hey, what do we got to do? Like you can't give up. So this is a message to sellers when things happen. I consider it like we're on the plane. And you got your pilot and you got the rest of your crew. Like, we got to land. So we're not just going to like eject out of the plane when we hit some turbulence. It's like, okay, we're up in the air right now. Like, just everybody hold on. We're going to try to, have a smooth landing and so forth to find like options, do whatever we can. But that is something else to consider as far as like having comps, which can be super challenging, even for agents. And then at least as agents, we have the ability to like pass the puck to the appraiser, because otherwise everybody's saying like, oh, we're agents, we aren't appraisers. Like even us saying like, oh, I think it will appraise at this, like, it's a real, we got to be very mindful of our language versus like, oh, I think you could, it's a stupid word. It's like, it's literally we're saying the same thing. It's like, oh, I think your selling value, your selling price of your home would be this versus like, oh, I think, I would appraise your home at this. We can't use those terms. But when you have limited comps, that can be a huge challenge as far as supporting the value. And you rely on the appraiser's opinion. And sometimes, I guess in your case, certain appraisers don't want to touch it because they actually have some kind of liability as far as like supporting their value. So then they're like, no, because see, I'm gonna give a value and then something's gonna happen and they're gonna come back. And then it's going to be on me as far as who is the appraiser on the property that appraiser that said value. So it's a whole thing. But another thing that folks would do as far as like holding values is also leveraging seller concessions, which can sometimes be a benefit to the buyer too. So I'll like share that with buyers. They're like, oh, let's offer $10,000 less. Sometimes it's like, well, if you're going to buy the home, you're also kind of driving your value down. So it's like, you got the value down lower versus like when you can sell it at the, price, but you can get $10,000 in seller concessions, which is i.e. closing costs. So it's like, oh, well, now you get to come to closing with $10,000 less. So now you get to keep that money to do whatever. And say your monthly payment, if we were to drop to $10,000, could be a difference of like $30. So would you rather $10,000 cash liquid in your bank account still, or would you rather save $30 a month?
Right.
And also support the value and so forth in the neighborhood. So that's something else that many people don't always consider. You really got to run the numbers to see like what makes the most sense.
Yeah.
Awesome.
Yeah.
Well, anything else as far as like before we wrap up? This is the Whiskey Wind Down. We got a seller here. What are some last words of advice or any key takeaways from your experience?
I mean, I like that airplane example, right? When you're in the air, you just got to land the plane and you just got to remember why you're doing what you're doing. Like if you're selling your home or whatever, there's a reason why you're doing it. And when things get rocky, you have to remember why you're doing it, right? Because that was the thing. Like I wanted to hit eject a couple times. I was like, man, screw it. Let's put another tenant in there and I'll just suck it up and we'll figure it out, right? And then And like I can't, like if I did that, then my problem doesn't change at all. Like I'm just kicking the problem on the road. So for me, it was like, okay, what ultimately do you want, right? And so I just had to go back to that. So I think that's just the reason, whether you're buying a house or selling it, it's like ultimately what is your motivation? And don't be motivated by things that don't serve you. Like don't be motivated by I don't even think people should be motivated by the market. Like, be motivated by ultimately what you need to accomplish in your life, and don't be motivated by what other people are doing. Other people are buying houses or nobody else is, but you know what I mean? Like if it's like, everybody, no one else is buying right now, so I shouldn't. Like, well, I mean, what are you trying to accomplish? Like, what's your why? Because you never know what can happen, right? I found a diamond in the haystack. I mean, even getting this property was a miracle. So, you just never really know what's going to happen. So that's what I would tell, anyone who's out there in the real estate world trying to make the transaction happen.
You hit the nail on the head, and that's something that we talk about often as sellers, or as agents, when sellers will act like, oh, is now a good time to sell? And it's like, whenever, and it sounds super cliche when we're like, whenever you're ready to sell is the time to sell. Like, because what people I think sometimes forget is like, real estate never sleeps. Even though we have like, cycles of real estate, like there's never a time where like nobody's selling. Like there's always movement on the real estate side. It's different motivations and kind of how you mentioned, not necessarily leaning on emotions or like, what the market's doing, but like what makes sense for you. So for some folks, that's like, I'm really like, we need to expand. Like I had some folks that were like, hey, we really need a larger home. We've expanded. We got more kids, XYZ. We're really like our price point here, but we're like not happy in the lifestyle that we have in our home right now. So yes, we could sell and have this equity, but then our payment's gonna change. It's like, okay, so you're gonna be miserable in your house for like that doesn't make sense.
Yeah,
in a sense of like,
it goes back to my warranty issue. Like, was ultimately saving $70 worth the peace of mind and having the security at the end of the day? What's ultimately important to me is security. So I did myself a disservice by not being true to what I actually hold as value. Like money isn't always the driver for me. Like for me, it's security, it's a peace of mind. So like I will make less so I can have peace of mind like all day, every day. So I was like, ultimately, that's what's important to me. So I think that's just what I want people to understand is like, yo, don't let CNN or Fox or news or whatever. Don't let other people tell you what's important to you and how you should make decisions. So
because that's gonna be your decision and your things to live with. And that's one thing that I'll even say as far as like understanding the emotions, and a really strong agent is also helpful because no matter where you are in life, real estate is absolutely an emotional process. So you have the emotional side and the logic side, and like really good agents understand both. But ultimately, at the end of the day, we have to like really re-emphasize what is the why and like think the logic way, because sometimes like until you read it back to them, like, so what you're saying is you would really be interested in doing this, even though that's exactly the opposite of what you said you were trying to do, and then you're still gonna, and then like, but then when people sit there, they're like, yeah, you're right. Like, that doesn't make sense as I hear you say it back to me. But that's like the value of having a trusted advisor. Like, hey, I support you in whatever you want to do. I just want you to like not look back and be like, oh, like you're making a decision based on emotion. Because in some regards, like as you do more transactions, in my opinion, as an agent, you can somewhat be desensitized, but somewhat in a positive way. It's like, oh, something happens in the transaction. Like it's not, to me, it's like a pilot. Again, like hit turbulence. It's like, I'm not going to freak out because there's turbulence. I've had turbulence before. There's a process for turbulence. This is what we do. Everybody sit down. And like when you have an agent that can give you that support, that guidance, I think that's always helpful to make for a smoother transaction.
You had the benefit that I had already been through a real estate transaction, because my first real estate transaction, my first two, this is my third real estate transaction. My first two, I was a ball of anxiety, and I feel so bad for my agents because I was so stressed. And like it was just like nothing was going right. And I was like, I mean, I wasn't like, I was just really stressed all the time, right? Because like it is highly emotional. Like you're in a very precarious situation. Like for me, like I mean, things could have gone wrong, and I could have been in a really bad situation, right? So I was just more healthy, and I was like, you know what? What's gonna happen? And like we're
gonna pray about it. We're gonna follow our process. We're gonna control what we can control. We're gonna do what we can do, and we're gonna have to figure out whatever else from there. So I definitely agree. Well, thanks so much for joining in and so forth. Thank you all for tuning in to this episode of the Whiskey Wind Down. Shout out to Michael Carpenter, all of my real estate agents. If you want to share your business and also how folks can keep in contact with you and what you offer for also real estate agents.
Yeah, so you can follow me on Instagram, Michael.architectmarketing. Architect spelled with a K, not CH. I do like social media consulting, marketing consulting, and also help agents generate new passive ways of income. So that's digital products, coaching programs, and also to support other small businesses and other entrepreneurs. So yeah, that's what I do. And I mean, I'm kind of I'm a semi-passive real estate investor. I try to invest in multifamily, and so hopefully we'll be doing. We're going to be buying a multifamily here in Houston. That's why we sold it in Temple, so we can come here and do a project here. So that'll be my next phase, is looking for another property and deciding what I'm going to do there. So yeah, that's me.
Awesome. Well, congratulations, and again, thank you for trusting me as your astute agent. I appreciate you, and until next time.
Yeah.
Awesome.